have already talked about ETFs. Now let's talk about how to diversify into international ETFs. International ETFs specifically focus on stocks and assets from market outside of India. They allow Indian investors to gain exposure to global economies and industries. Hi, I am Vrishali Kulkarni, and today we are going to talk why should you consider investing in international ETFs. There are several compelling reasons. Firstly, they offer diversification beyond the Indian markets. By investing in international ETFs, you spread your investment risks across different countries, currencies, and economies. This can help mitigate risk associated with any one country's economic performance. Secondly, international ETFs provide access to sectors and industries that may not be heavily represented in Indian markets. For instance, technology giants or global healthcare and automobile leaders can be accessed through these international ETFs. Thirdly, investing in international ETFs can potentially enhance returns. Different countries and regions may experience economic cycles differently. So, by diversifying globally, you can benefit from growth opportunities in various parts of the world. Now, let's discuss some popular types of international ETFs that Indian investors often consider. Number one is US equity ETFs. These ETFs track indices like S&P 500 or Nasdaq, giving exposure to large-cap US stocks across various sectors such as technology, healthcare, and consumer goods. Second is emerging market ETFs. These focus on stocks from emerging economies like China, Brazil, and South Korea. They can offer high growth potential but also consider with high volatility. Third is developed market ETFs. These ETFs include stocks from developed economies such as Europe, Japan, Canada, and Australia. They typically offer stability and dividends. Fourth is sector-specific ETFs. Just like in India, international markets also offer sector-specific ETFs focused on industries like technology, healthcare, energy, and more. When selecting an international ETF, consider a few key factors. Number one is underlying holdings. Look at which companies or assets the ETF holds. Ensure they align with your investment goals and risk tolerance. Second is currency risk. Understand how fluctuation in exchange rates can impact your returns. Some ETFs may hedge against currency risk while others do not. Third is expense ratios. Compare the costs associated with different international ETFs. Lower expense ratios mean more of your money is invested rather than paying fees. And fourth is liquidity. Ensure the ETF you choose has sufficient trading volume on Indian exchanges for ease of buying and selling. In conclusion, international ETFs can be a valuable addition to your investment portfolio, offering diversification, access to global growth opportunities, and potential for enhanced returns. However, like any other investment, it's essential to do your research, understand the risks, and align your investments with your financial goals. Thank you for tuning in. This is Vrishali Kulkarni signing off. Until next time.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.